We have been tracking emerging technologies for over a decade, and I've learned to recognize the signs when an entire industry is about to explode. We saw it with cloud computing in 2010. We saw it with electric vehicles in 2019. And right now, I'm seeing the exact same pattern forming in quantum computing. The difference this time? Google just announced a breakthrough that would take traditional computers longer than the age of the universe to solve. IBM received a billion-dollar government check, and companies that were worth millions last year are now valued in the billions. This isn't hype. This is the moment when science fiction becomes investment reality. Here's the thing about massive investment opportunities. They follow what I call the 37% rule. You spend the first 37% of the opportunity watching, learning what good looks like, understanding the landscape. Then, when you see something genuinely better than what came before, that's when you move. For years, quantum computing was all laboratory experiments and theoretical breakthroughs. But in the last 6 months, everything changed. We're seeing real commercial applications, actual revenue growth, and most importantly, the smart money is positioning itself before the mainstream catches on. The 37% watching phase is over. It's time to understand what comes next. And if you want to stay ahead of these technology shifts before they become mainstream news, make sure to subscribe to ZDK Formations right now. And 6 months ago, if you wanted to invest in quantum computing, you had maybe 4 legitimate public companies to choose from. Today, there are 7 major players, plus dozens of companies building the infrastructure that makes quantum computing possible. But here's what most coverage has missed entirely. This isn't just about building quantum computers anymore. We're seeing 3 distinct investment opportunities emerge. First, you've got the pure-play quantum computer builders. Companies like IonQ and D-Wave that are literally building the machines that could change everything. These are your highest risk, highest reward plays. Second, there's what I call the quantum security companies. When quantum computers become powerful enough, they'll be able to crack most of today's internet security in minutes. Companies like ArcGit and BTQ Technologies are building the new security systems we'll need. This is less sexy but potentially more profitable. Third, and this is where smart money is really moving, you've got the infrastructure plays. These are companies like Coherent and Lumentum that make the lasers, the cooling systems, the precision instruments that every quantum computer needs to function. Think of them as the pick and shovel plays of the quantum revolution. The preparation is built into the result here. While everyone's focused on which quantum computer will win, the infrastructure companies are selling to all of them. Let me walk you through the landscape, starting with the pure plays. IonQ is the current market leader with a $26 billion company size. They build what's called trapped ion quantum computers, which basically means they use individual atoms as the building blocks of computation. Their machines are already available through Amazon's cloud service, and they're reporting actual revenue growth up 77% year over year. But here's the key. They achieved 99.99% accuracy in their quantum operations, which is the gold standard the industry has been chasing. That's real commercial traction, not just laboratory results. D-Wave Quantum takes a different approach. They're focused on solving real-world optimization problems, things like traffic routing, financial modeling, drug discovery. Their company size is $11 billion, and they just signed a letter of intent with the U.S. government for $100 million in funding. What makes them special is they're already selling their systems to commercial customers, not just researchers. But here's where it gets interesting. Rigetti Computing, valued at $9 billion, builds some of the fastest quantum systems in the world. We're talking 1,000 times faster than competing technologies. The downside? They're struggling with accuracy issues. Their systems are fast but not reliable enough for most commercial applications yet. Now, Inflection is the wild card. They went public this year and they're doing something completely different, building quantum computers that work at room temperature. Every other quantum computer needs to be cooled to nearly absolute zero, which requires massive, expensive refrigeration systems. If Inflection can make room temperature quantum computing work, they could leapfrog everyone else. Here's what you need to understand about risk. Every single one of these companies is burning cash to stay alive. IonQ has about 2 years of runway at current spending levels. D-Wave is in better shape with government backing, but they're still not profitable. This is venture capital territory, not dividend investing. On the infrastructure side, Coherent makes the lasers that control quantum systems. They're a $74 billion company, with quantum being just one piece of their business, which means they're not going to zero if quantum takes longer than expected. Same with Lumentum at $67 billion. They make optical components for everything from internet infrastructure to quantum computers. The beauty of these infrastructure plays is they're selling to everyone. Whether IonQ wins or D-Wave wins or some company we haven't heard of yet wins, they all need precision lasers and optical components. Let me be completely honest about the elephant in the room. Most experts believe we're still 5 to 10 years away from quantum computers solving problems that actually matter to most businesses. These companies are burning through hundreds of millions of dollars developing technology that might not pay off for years. The pure-play quantum companies are essentially biotech investments, high risk, high reward, with a real chance of going to zero if the technology doesn't work or if they run out of money first. Even the government funding isn't guaranteed. That $2 billion is spread across multiple companies over several years, and it comes with strings attached. Companies have to hit specific milestones to get their full funding. But here's the trade-off. If quantum computing works the way experts think it will, we're looking at a technology that could be worth $2.7 trillion by 2035. That's not my number, that's from McKinsey, one of the most conservative consulting firms in the world. So how do you play this without betting the farm? I use what I call the $100 portfolio framework to think about allocation. Out of every $100 you're investing, here's how I'd break it down. $50 goes to safe investments, your index funds, dividend stocks, bonds. This is your sleep well at night money. $35 goes to growth investments, established tech companies with quantum programs. Think Microsoft, which runs Azure Quantum Cloud Services, or IBM, which has been in quantum research for decades. These companies won't go to zero if quantum doesn't work out, but they'll benefit massively if it does. $15 goes to moonshots, the pure-play quantum companies. This is money you can afford to lose completely, but if you're right, it could change your retirement timeline. Within that $15 moonshot allocation, I'd split it three ways. $5 to the market leader, IonQ, $5 to a differentiated technology play, maybe Inflection with their room temperature approach, and $5 to an infrastructure company like Coherent that benefits regardless of which quantum technology wins. The key is understanding that this $15 is venture capital money. You're not buying stocks, you're buying lottery tickets with really good odds. Here's what I want you to think about. 6 months ago, the fear around quantum computing was, what if this doesn't work? Today, after Google's Willow chip announcement and the government funding, the fear has shifted to, what if this works and I miss it? That's a fundamental psychological shift, and it's exactly what we saw with AI stocks in early 2023. The question you need to ask yourself is your decision calibrated to the actual opportunity, or is it emotional? If you're thinking about putting your entire retirement account into quantum stocks because you missed out on crypto or Tesla, that's emotional. If you're thinking about allocating 5 to 10% of your growth portfolio to a sector that could be worth trillions in the next decade, that's calibrated. The smart money isn't rushing in blindly. They're positioning themselves for a technology shift that could be as big as the internet, while acknowledging that the timeline is uncertain and the risks are real. Keep your head on a swivel because this space is moving fast. But remember the 37% rule we've done our watching? We understand what good looks like, and now we're seeing companies that are genuinely better than what came before. This isn't financial advice, I'm not your financial advisor, and you need to do your own research before making any investment decisions. But I am sharing how I'm thinking about this opportunity and where I see the smart money moving. If this breakdown was helpful, make sure to subscribe to ZDK Formations and hit that notification bell so you never miss our analysis of the next big technology shifts. Drop a comment below and let me know which quantum company you think has the best shot at changing the world. And if you know someone who's been looking for the next big investment opportunity, share this video with them.